Today, cryptocurrencies move lower. Wyoming's stablecoin is now available to the public, and the CEO of Alchemy provides his outlook for stablecoins in 2026. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies in the red, with Bitcoin falling to the $91,000 level as of noon Eastern. Ether fell 3% and XRP fell 3.5% after Ripple president Monica Long told Bloomberg Ripple has no plans to pursue an initial public offering right now. Taking a quick look at strategy, shares rose nearly 4% as of noon after Morgan Stanley Capital International, or MSCI, decided to keep digital asset treasury firms in global indexes in a pivot from prior plans to exclude them. Okay, let's talk about the top stories. Morgan Stanley is diving deeper into the crypto space, this time filing for a spot ETH ETF. The investment bank most recently submitted a filing with the SEC for a Morgan Stanley Ethereum trust. We told you yesterday it also filed for Bitcoin and Sol ETFs this week. Crypto-tied exchange-traded products have spread rapidly for the past couple of years, ever since the launch of spot Bitcoin ETFs in the U.S. back in 2024. Back in October, Morgan Stanley also made the decision to broaden crypto access to all its clients. Next, UK-based bank Barclays announced an investment into US-based stablecoin settlement company UBYX. Barclays today announced the partnership, mentioning the investment comes at a time of increased regulatory clarity in several jurisdictions and growing evidence of growing adoption around tokenized money. Speaking on the investment, Barclays head of digital assets and strategic investments said, as the landscape of tokens, blockchains, and wallets evolves, specialist technology will play a pivotal role in delivering connectivity and infrastructure to enable regulated financial institutions to interact seamlessly. Finally, Wyoming's stablecoin is now live. In a press release today, the state said the FRNT token was available to the public, marking the first and only state-issued stablecoin in the United States. Wyoming also announced a partnership with Franklin Templeton to manage the stablecoin's reserves. FT's affiliate, Fiduciary Trust Company International, will serve as the custodian. Wyoming stablecoin spent years under development, and just last year, the state moved to launch the token after the passage of the Genius Act. All right, sticking with stablecoins for our main story. I spoke with Nikil Viswanathan, the CEO at Alchemy, which powers major stablecoin issuers like Circle and PayPal's PYUSD. He provides his outlook for stablecoins in 2026 and also discusses what he hopes to see on Capitol Hill as it relates to crypto regulation in the U.S. So Wyoming announced today that the state's Frontier token is now available to the public, and it marks the launch of the first and only state-issued stable token in the U.S. What's your reaction to this development? And now that a state-issued stable token is live, do you think other states will follow Wyoming's lead?
It's a really exciting development. What we are seeing is the exploration of the United States into the cryptocurrency industry, which I personally think is one of the biggest bull signals for the United States as a global superpower. If you look at the last 50 years, the United States has been a global superpower in large portion to the internet and computer industries being built here. If the 10 square miles around Stanford University have produced the top 3 companies in the world by market cap and 5 of the top 10. Given the last regulatory regime with the Biden administration, which was obviously trying to suppress crypto as much as possible, I think it was a really dangerous thing because it put US economic dominance in jeopardy. The cryptocurrency industry and the AI industries need to be built here. And that is a good shift we're seeing with the new administration. And the Wyoming token is just a first step towards that.
So do you think now we will see other states follow suit?
I think you'll see a lot of experiments. There's a big debate in the stablecoin world today. Is it going to be 1 or 2 big stablecoins like USDC and Tether? Are there going to be state stablecoins? Are there going to be country stablecoins? Are there going to be app-specific stablecoins? What you'll see, in our opinion, is you'll see a proliferation of a bunch of different experiments, but we expect this to coalesce to 1 to 2 large stablecoins. The important thing to remember is the maturation of the technology actually happens when the consumers don't even talk about the technology anymore. For example, when you go to dinner, you don't say, I took a computer app and used the internet to pay. You say, no, I took a Uber and paid with Apple Pay. while we are still talking about which stablecoin you are using, it's an indicator that cryptocurrency is not yet mainstream because ironically, when cryptocurrency is mainstream, you will not know if it's a stablecoin, what it is, what the name of it is. You'll just be using US dollars and it'll be seamless behind the scenes.
So, also today we learned that Barclays bought into US based stablecoin settlement company UBYX. The news release points to regulatory advancements in several jurisdictions. And of course, we saw the Genius Act stablecoin bill become law here in the US last year. The release also notes that the investment comes at a time of growing interest in new forms of digital money based on tokens transacted on public blockchain infrastructure. So, do you think we will see more developments like this throughout the year, especially following regulatory advancements for stablecoins, like the fact that there is now a federal framework in place in the US?
The short answer is definitely. The regulatory risk reward trade off has completely flipped. A year and a half ago, if you're JP Morgan, you were putting your core business at risk by experimenting in this small crypto thing, and it wasn't clear how you can make a lot of money on it. Now, the administration is very pro crypto, so that regulatory risk has massively been reduced. And you look at large companies or smaller but still large companies like the Coinbases and the Robinhoods, these are roughly $100 billion companies, and they're printing money in a way that JP Morgan would very much love to get into. If you look at JP Morgan or Fidelity's products, a lot of their services they offer, they're making very small percentages. So call it like tens of basis points on different funds and fee and products that they offer. Coinbase makes 3% on staking rewards from all of its customers. That is a mouth-watering number for companies like JP Morgan. So it's a huge revenue opportunity, and it's like a much reduced risk profile. So that's why we'll see a lot more advancements from the institutional area.
Yeah, we have been seeing a lot of interest in stablecoins since the Genius Act became law, with MasterCard, Visa, and JP Morgan all making moves in the crypto token space. Retailers like Walmart and Amazon are exploring issuing their own stablecoins. So, what do you think has changed for stablecoins since the Genius Act became law, and what's your outlook for stablecoin growth in the new year?
Great question. So, the first thing, going back to kind of the global view, Bitcoin is actually a threat to the US dollar, but stablecoins is actually the best expression of United States dominance of the dollar possible. What stablecoins do at a fundamental level is export the US dollar to people who don't have access to it today. If you live in Venezuela, if you live in Argentina, if you live in certain countries in Southeast Asia, honestly, most of the world, and your country does not want you to have US dollars. Any country doesn't want its citizens to have US dollars because it destabilizes their own currency. So if you have a country that has hyperinflation, how do you prevent your citizens from getting US dollars? You have strong capital controls on the banking system. So in countries like Argentina, this changed recently, but you can't take out more than $200 of US dollars per month, which is wild. So stablecoins give you a way around that. So for that country, for other countries like who are trying to prevent their citizens from getting US dollars, it's not a good thing. For the United States, it's the best thing ever. Stablecoins today have $300 billion in usage, which is the 12th largest country as a holder of US Treasury bills, and more than India, more than Russia, more than Saudi Arabia. So what we're seeing with that is this expansion of the US dollar.
Now, I want to focus on JP Morgan because in June, the bank announced it was launching a deposit token designed to serve as a digital representation of commercial bank money. We also learned that Alchemy smart wallets supported the bank's deposit token launch. Take us through that collaboration and how's it going so far?
Yeah, very exciting, to work with one of the largest bank in the world and see how their risk appetite for crypto has completely shifted. So conceptually, this deposit token can be a complicated financial term, but it's a pretty simple idea. So when customers deposit funds into JP Morgan has multiple different entities internally and externally that they trade with. If you want to move money from, let's say you deposit into JP Morgan US, you want to move it to JP Morgan Singapore, typically you have to use the SWIFT system and correspondent banking to move money. And these things take a long time. It takes days to move money between entities and between countries in general, not just for JP Morgan, for anybody in the world. And while you are, so one, there's a lot of errors. It's, very slow. There's high fees, and you're not able to earn interest on that money while it's in motion. Now you can have instant transfer of money between different entities, and it's a really, really exciting thing. It's still the early days, but it's really cool to see one of the largest bank in the world, be really on the forefront of technology.
Now, going back to crypto regulation, we are expecting Congress to take up crypto market structure legislation as soon as this month, after progress pretty much stalled at the end of 2025. So what would you like to see from lawmakers in that regard? And are you optimistic we will see a crypto market structure bill become law here in the US this year?
Well, if I was a betting man, I would put money on it on Polymarket that it would happen. It will happen. Look, it's really simple. At the end of the day, if you were trying to innovate in the industry, like imagine if it's 2002 and Mark Zuckerberg or 2004, Mark Zuckerberg's trying to build Facebook and he's at Harvard, and the trade-off is if he builds a site, he might go to jail. There's some risks that he is not even sure of because it's not even clear what is allowed and what is not allowed. The computer industry or the internet industries would not have flourished in any fashion if that was the case. And that's what's happening with the crypto industry. Historically, there was this regime of, we're not going to tell you what the rules are, but if you do something we don't like, you're going to go to jail. And that was really scary, and it really stifles innovation, right? All of us who are building companies, and both the large institutions who want to get into crypto and small startups like us and small startup founders are in kind of jeopardy and kind of limbo because there's not clarity. So I think what the industry has been asking for, no one in the industry has been saying we don't want regulation. The industry has been saying we want clear rules on what is allowed and what is not allowed. So I think it's a mandatory if the United States wants to be competitive in kind of the next frontier of technology. And I think it's going to happen.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.